So I asked Warren AI a very simple question today, and that is, how does the stock market tend to trade after the Fed begins to cut rates? What's going on, guys? It's Ricky with Tactical Solutions, and let's go ahead and jump right into it. So for those that have not seen, this is Warren AI by InvestingPro, and I asked it, how does the stock market tend to trade after the Fed begins to cut rates? I like to look at statistics. I like to look at the data, and I'm sure a lot of you guys would appreciate this. Warren AI is pretty much a more tailored version of ChatGPT for investors and for traders, and it's presented by InvestingPro. So it says, on average, the S&P 500 has gained a notable 11% in the 12 months following the start of the Fed rate cutting cycle, based off of the past 10 easing cycles since 1982. The part that I really appreciate this is that it's not just the past few years. We're literally talking about the past almost 50 years, almost 50 years. With that being said, it takes the past 10 cycles into consideration. And it also highlights that after taking into consideration the past 10 cycles, there are two cycles that did lead to a broken, a break in the script. And that means that in 2001 and in 2007, we actually saw periods of a retracement, a drop from the S&P 500 of negative 13.5% and a drop of 23.9% during the 2007 retracement. If those numbers or years sound familiar, that is because this is the dot-com bubble crash and the housing bubble crash. So again, two significant triggers. But again, when you do the math and you take into consideration that, hey, based off of the last 10 cycles of cutting rates, only two led to a downturn if you take the entire 12-month period into consideration. So statistically speaking, when looking at the data, cutting rates does tend to be more bullish than bearish, an 80% pretty much success rate. Only two of those rate cuts have actually led to a downturn, and those two rate cuts were because of specific triggers. Something broke during those retracements. And remember, you guys know that I want markets to retrace. I personally view markets to be overbought and overvalued, but I don't want to get it twisted. I don't want my personal bias to cloud my actual way of thinking. What I think matters most is the data and the numbers. And it is very clear that statistically speaking, markets tend to rally after rate cuts. And I wanted to make sure that that was understood and how I came to that conclusion based off of the data. The thing that I want to make sure is also understood is that this is taking the average 12-month gain after the first rate cut. What you need to understand is that that doesn't mean that right after the Fed starts to cut rates, that for the next 12 months, we're just going to see a sudden rally. No. If you take the market into consideration from what we've already experienced, we're coming off of a very strong rally, one of the strongest rallies in history. So do not be surprised. And it actually made this very clear that short-term stalls. JP Morgan analyst warns that the market may initially consolidate or stall for a few months as the Fed cuts before the longer-term rally takes hold. In other words, the first move isn't always vertical, especially if investors are anxious about economic headwinds, which again, shouldn't surprise you. We are seeing a slowdown in the labor market. The Fed cut rates for the first time today in 2025 by 25 basis points, but yet we are still seeing inflation rise. We still have the concern of tariffs, and China is still something that may be something that I can save for another time, but China is still a major concern in figuring out this entire trade war, right? So there are still concerns out there that might actually act as challenges, not just for our economy, but the stock market as well. And this is something to take into consideration, where it can give you a micro but also macro outlook of what to expect. That just because we cut rates right now, don't expect a sharp rally right away. But statistically speaking, yes, markets do tend to be more bullish than bearish based off of when the Fed begins its cut rating cycle. Now, the thing that I also want to highlight is summarize what exactly was shared today. The summary of the Fed decision. I felt like some of you guys would appreciate this that didn't take time to tune on in. So the Fed decided to cut rates today by 25 basis points, and this is the first rate cut of 2025. The median projection shows 50 basis points in additional rate cuts for 2025, meaning an additional 50 points are going to be cut is the expectation this is the median projection for 2025. So in the next months for October, November, and December, they're expecting at least either one large rate cut of 50 basis point or two smaller rate cuts of 25 basis point. Governor Miron is in favor of 50 basis point cut today, and he was the only member that favored that 50 basis point rate cut. Surprise, surprise, this was the appointee from Trump. And in my opinion, again, just food for thought, it's a complete conflict of interest to have someone that's part of the Trump administration to also be a part of the Federal Reserve. Just my 2 cents. The Federal Reserve is made to be independent. How can the Federal Reserve be independent if one of its members is part also of the Trump administration and one of the only ones that is part of the Trump administration? Again, it's good to call BS when BS is being presented, and this is a complete conflict of interest. It does challenge the Federal Reserve's independence. Nonetheless, Jerome Powell was asked about this, and he said not one single member can overall dictate what the Federal Reserve Committee will be voting on, as again, all these members are pretty much cycling on who votes for what and when. The Fed says downside risks to employment have risen. This is the idea of the slowdown of the labor market. 6 Fed officials see more rate cuts in 2025. 6 Fed officials see no more rate cuts in 2025. I felt like that was important to highlight. And 8 Fed officials see 2 additional rate cuts in 2025. Also important to highlight. The Fed is shifting their focus to the labor market because the labor market is slowing down. My question to you is cutting rates actually going to save the labor market? The Fed made it very clear today. The labor market is showing to be weak, but again, 25 basis point rate cut probably isn't going to change much. Is it because of the AI boom and the huge layoffs that follow, or is it the mass deportation that led to this weaker labor market? Nonetheless, he did highlight one specific thing. It's not just that less jobs are being created, but also people are staying at their jobs for longer. So it kind of balances out. So it's going to be very interesting to see how this ends up playing out. So the last thing that I quickly want to highlight is the bottom line. In most cycles, Fed cutting rates ignites a year-long rally unless recession strikes. That would be the trigger. Expect potential leadership shifts and some short-term volatility, but history favors the bulls once the Fed pivots to easing. And this means cutting rates. Again, war and AI in the best way that I can describe it is a more tailored version of ChatGPT for investors and for traders. And for those that care to have access to InvestingPro and the way that I choose to use it, I like to use it in performing fundamental analysis. So if you guys have ever seen me pull up these prompts and or this pro research, this is all available for InvestingPro. And again, you can get it for 50% off plus an additional 15% off for the next 5 hours. You don't have to sign up. It doesn't really matter if you don't actually value it, but if you're someone that's trying to get more into not just technical trading, but to actually be able to do a more fundamental analysis on the companies that you're investing and trading, then again, InvestingPro is having a discount. If you were considering already signing up and using their service, then why not just get it for a better deal? And that's going to be the first link in the description down below. So again, we'll talk about a little bit more about this tomorrow. One thing that I wanted to highlight very quickly is the series of trades that I took today. So when it comes down to my position on HIMS, I made a little bit over $1,600 on the day. I closed out that trade. And then on Tesla, I lost $3,100. And again, one thing that I love to do is I love to show you both my green trades and my red trades. So again, tomorrow I will be hosting my live trading session. And whenever you feel like you are ready to tune on in, like I said, you get to see all of my trades live in real time, right at market open. I trade live every single morning, right at market open for about 30 minutes to an hour. If you ever want to tune on in, it's the second link in the description down below. You can sign up right now, watch the welcome section of the LPP lesson library, and get access to our daily live trading session starting tomorrow. So I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.